Here we have the week 7 profitable member strategies update. The stock that we will be looking at this week will be Arcadium Lithium. The stock ticker for this trade will be ALTM. For this stock, we're going to say currently that the minimum price target here is $4.30. This is something that could change, however, in the future. I don't want to use this as a hard target. This is something that could be raised in the future. But we do need to come up with at least some price target here. So currently, we're going to be looking at an upside coming in at roughly $4.30. And if this target is reached, this would indicate minimum gains of 90.6% for this trade. So here's the current price chart for the stock. As we can see, this stock is currently caught in a downtrend. We're going to be scaling into this trade in threes because there is a fair amount of momentum here, and I will be covering that more in the technical analysis portion of this video. Please make sure to look at that one as well because I will be explaining this, the recent chart activity here. But the stop loss will be right around 85 cents. I don't really expect it to get that far, but we do need a protective stop loss in place for all trades. For a bit of background on this company, Arcadium Lithium operates as a lithium chemicals production company. So we're producing lithium here. It engages in lithium production processes, including hard rock mining, conventional pond-based brine extraction, direct lithium brine extraction, DLE, and lithium chemicals manufacturing. So what we're really dealing with here is a commodities company. The company's products include lithium hydroxide and lithium carbonate. Arcadium Lithium was founded in 2023, and its headquarters is in Ireland, Shannon, Ireland. Okay, so if we look at the fundamentals here, we can see that the recent results have placed Arcadium in the top 5 global producers for this product. So the company that we're looking at here is a top 5 lithium producer globally by capacity based on lithium carbonate equivalent measuring basis. So this is essentially the standard measurement that's used to make these sorts of determinations. The company's earnings growth is expected to grow at a rate of 30.87% each year going forward for the foreseeable future. And then we also have to understand that the stock is trading significantly below my estimates of current fair value by at least 90%. The key metric that we're going to be looking at for this company is the price to earnings ratio, because there are some very interesting developments here when we compare this company to its peer group. Overall, again, here what we're looking at is some past history based on some prior events that have been seen in the development of this company. What we are dealing with here is a stock that is in a definite downtrend. That is something that can't be ignored, and there's a tremendous amount of momentum moving in the other direction. I'll cover that in the technical analysis portion. But what I'm looking at here is for the potential of a reversal point. A lot of damage has been done to this chart, and I don't see much of a possibility here that we can extend much further. That doesn't mean we're at the exact bottom necessarily, but we're getting very close to that point. So I do expect to see turnarounds in this stock going forward. So as I said previously, over the next 12 months, I do expect to see gains here coming in at least at $4.30. I do think that this is a very conservative estimate, however, and I do think that this company could see share price spikes that go beyond this number, but we do need to come up with at least some sort of an upside target here. So I think a conservative number here would be $4.30, and if this target is reached, we would be looking at gains here of 90.6%. Since we're dealing with a small cap stock, one of the main issues always is going to be price volatility and within the share price itself. So here we can see that there has been relative to the rest of the market and even relative to the industry, Alt M has experienced higher levels of price volatility. But I actually think that this could work as a positive for the stock because most of that volatility has been in the downside direction. So if we do see that trend continue, the volatility has stabilized. We've seen kind of stable levels of volatility, But if we were to see the same type of volatility in the opposite direction, now that we're sort of looking for a bottom in this stock, that in this case, I think the volatility could actually work in our favor, because I think that this would be in the positive direction rather than in the negative direction. Share price movements to the downside are looking, the limitations there are looking very clear at the moment. And I really just don't think that the stock has much more room to extend to the downside. So the key metric that we're going to be watching for this stock is the price to earnings ratio. We cannot always do this with small cap stocks, because most small cap stocks are not profitable. Most of those companies are not profitable. However, this company is. So it's a bit of an outliner in that respect. And that's definitely a clear positive. So for this analysis, we will be able to use the price to earnings ratio, because we are seeing positive valuations there. In addition to that, we're seeing a very low price to earnings ratio, as we will see in the following slides. Currently, we're looking at a price to earnings ratio of 10.7x, which is very low, not only for this industry, but for the broader market as well. You can compare that to companies like, say, Palantir would be an example. Palantir is an excellent company, but those PE ratios are a bit out of control. This is not the case for this company. Okay, so here's a little bit of a visualization of what I'm talking about here, as far as the company's valuation relative to its peer group. So here we can see that the price to earnings versus peers, uh, Altem is currently a value based on its current. I think I missed some part of the slide here, but Altem is a good value based on its current price to earnings metrics here. So as we can see on this chart here, the PE ratio for Arcadium is currently 10.7. The average amongst its peers, and remember, this is the top. This is a company that's in the top five for this peer group. The current price earnings average comes in at 25.9x, so way above where we are currently, more than double, well over double where we are currently for this stock. And it is at the low point relative to this peer group. So this is honestly one of the most important slides in this entire presentation. Because this does show the relative valuation here relative to other lithium mining companies. So for anybody that is interested in gaining some exposure to the EV market without directly investing in an EV company, here what we're going to be looking at here is the underlying commodity producer. And then within that group, this is an extremely cheap company, based on its price to earnings ratio. Here we have the earnings and revenue growth forecasts for Arcadium. Currently, the earnings growth rate is expected to come in just under 30.9%. And then the EPS growth rate, the earnings per share growth rate, is a little bit lower at 24.1. However, these numbers are still extremely high. And as we can see here, the overall trend expectation here is for continued positive growth here. That's extremely strong relative to the peer group and relative to the broader market. So here are some of the growth forecasts that are currently expected for the company. Again, this is this 30.9% figure for annual earnings growth. Here we can see that this is much, this roughly doubles what is seen in the industry and in the broader market. So we're dealing with very strong values here. The annual on the revenue side, the annual revenue growth is also expected to far outperform the rest of the market as well as the industry itself. So there's a huge amount of outperformance here for a stock that is trading at very low prices. Okay, so essentially here I'm just going to explain this prior chart here for the growth forecasts. So here we can see that the Alt-M's earnings ratio, earnings performance versus the market, Alt-M is expected to grow at a rate of 30.9% per year, which is faster. Which is the expectation here is faster than the broader market at 15%. So that would be this pink bar in the bar chart. This is a high earnings growth company. Altem earnings are expected to grow significantly over the next 3 years. So this is not a short-term outlook here. Revenue versus the broader market. Altem revenue growth of 22.4% per year is expected to grow at a rate that's faster than the broader market, which is just coming in at 8.5%. And then this qualifies as a high growth rate company on the revenue side here. Altem revenues are expected to grow at 22.4% per year, which is faster than the category for fast growth rates, which is typically defined as being 20% in revenue growth. Here's just a quick look at the revenue and expenses breakdown for the company. I'm not going to go into each of these individually. If this is something you're interested in looking at here, it sort of breaks out individual segments to see where the money comes from and where things are spent and where revenue comes from. If you are interested in this, you could possibly pause the video here and take a closer look. So here we're looking at the financial position analysis, roughly, debt to equity type of measurements here. So here we can see that there are some fairly different trends here in the short term trends and in the longer term trends. Short term liabilities, Alt M short term assets of $1.1 billion exceed its short term liabilities, coming in right around $473 million. As we can see here, these trends are a bit closer in nature, but the longer term trends here are significantly favorable for this company. So its long term assets far outweigh its long term liabilities. So I do think that this also supports the outlook here for a potential reversal zone in the stock itself. Here we have the debt to equity history and analysis. So as we can see here, this rising blue line here is the company's equity, and then the red line at the bottom of the chart is the company's debt. We will be taking a bit of a closer look here, and I will be explaining this chart in the following slide. But what we mostly want to look at here is the significant distance here between the company's equity and its total level of debt. And its equity levels have significantly increased recently over the last year. Okay, so here we're just explaining the prior slide. So the overall debt level, Alt M net debt to equity ratio is only 3.6%, which is satisfactory. There are no problems here. The company is also reducing its debt. Arcadium's debt to equity ratio has been reduced from 11.3% over the past 5 years. So this is a fairly significant reduction in debt from 11.3% to 3.6%. Interest coverage on its debt. Alta-M actually earns more interest than it pays. So coverage on interest payments for debt is not a concern for this company. Here's the balance sheet visualization. Rather than just showing a boring balance sheet here, we can just sort of see where the debt metric fits in within the broader picture here. And we can see that the relative size here is quite small. So we're looking at 634 million in debt roughly. But the physical assets and long-term assets, the overall equity figures, far outweigh what is seen in the debt metric. So this is a healthy looking balance sheet here. Some debt has to be accrued for a company that's in the exploration of minerals and things like that. So we would expect to see some debt here, but this is not excessive by any means. Okay, so now we're just going to be taking a look at who actually owns the stock and what are insiders doing with the stock. So these are people that actually work at the company, and as we can see here, there's been the most of the activity has been in the positive direction. We're seeing insiders buying the stock rather than selling the stock. We do see one example of an insider shareholder that did sell some stock, but this is a very small number. This is only 343 shares. And that occurred back in February. So, there's not really much recent activity where we're seeing insiders sell shares, and that does show that people that actually work at the company do have confidence in the underlying operations. Here's just another visualization of the insider trading volume. So as we can see here, this recent sell from February is it's a very small bar on this chart. Overall, we're looking at a lot more green here. So insiders within the company are buying the stock for the most part rather than selling it. Here we're looking at the broad ownership breakdown for the company, and as we can see, roughly nearly two thirds of the company's stock share is owned by institutions. We are starting to see the general public that's becoming a bit more aware of the stock. A little over 1/3 of the outstanding shares are owned by the general public, but for the most part, this is still a company that is being owned by institutions. Here's a look at some of the top shareholders for the company. So these would mostly be the institutions that we're talking about here. So what we're seeing, some very familiar names here: BlackRock, Vanguard, State Street. There's a lot of very common names here. Van Neck is a very well known commodities firm. They focus heavily on the commodity space, gold and silver and things like that as well. So Van Eck is a very reputable name as far as a potential ownership is concerned, and there are a lot of well-known institutions that are included on this list. Okay, so in conclusion, Arcadium Lithium, stock ticker ALTM, is likely to benefit from long-term rising EV sales despite lower near-term prices. So overall, the trend in EV has seen a lot of weakness. I think people are sort of, leaving. The hype is starting to die down a bit. EVs are not exactly taking over the world at the moment. But the share price movements and the valuation movements during this process have been extreme. Like, we've seen a huge amount of money flow out of the EV space in investment terms. And I do think that when you're looking at the underlying commodities themselves, we're not looking at an EV company here. We're looking at the underlying commodities that are used to develop these EVs. So I do think that offers a better margin of safety rather than looking at an EV company on its own. Current trends in technology show that lithium is one of the best positioned minerals thanks to its application in a host of high tech areas, from EVs to alternative energy storage systems. There's a broad range of uses here. So we're really not even gaining exposure to one specific industry. You could be looking at alternative energy, you could be looking at EVs. And what we're doing here is we're looking at the underlying commodity producer. We're not looking at an individual alternative energy company or an EV company. So some of the companies that are covered on the public channel would be things like Maxion Solar or Neo Incorporated and things like that. What we're looking at here as one of the high profit member strategies is in my view a much safer option. Because what we're really dealing with here is a commodity rather than the product. The question would be whether or not that commodity can actually fall to zero, and I don't think it can. Just continuing here, Arcadium Lithium specializes in lithium with various properties around the world that produce and process related compounds. There are risks to this stock, particularly given the recent pressures that have been seen in EV markets. And this has some people wondering if the future demand for EVs within this sector will live up to the previous hype. However, there is little doubt of the importance of these new technologies over the longer term. And if the demand for these products does continue to grow, even if the demand growth may be more muted than prior projections. So, what we're saying here is that, short term, we could be seeing some weakness in this part of the market, but the longer term, I don't think anybody really denies that EVs will be part of the future. And we're not even looking at one industry here. I mean, I am focusing a bit on EVs, maybe too much, because there are other applications as well. Arcadium made its market debut in January 2024, following the merger of two prior chemical companies that were previous high flyers. Shares are currently down sharply for the year to date, and we will cover this in the technical analysis portion of the video. But the company is still profitable and is certainly worth a look now that it is more than fairly valued at its current prices. As we showed in the price to earnings ratio. Overall, the recent slowdown in EV sales could prove to be somewhat temporary, and recent weakness in Alt-M stock could mark a strong buying opportunity here going forward. So overall, I do think that this is an undervalued company at the moment. I do think that a tremendous amount of destruction has been done to the share price, and what we're going to be looking for here is an upside reversal in that share price.